All right, let's talk today about the history of charities and some of the problems that people who are good hearted and want to do good in the world, some of the problems they run into when they decide to use the charity business platform, otherwise called a tax exempt organization. So, a lot of people who like the idea of doing good believe that a charity or a tax exempt organization is the right business structure for doing good and that corporations do bad. And I've been working on this issue for a long time. I've started a lot of different companies, including several tax exempt businesses, otherwise known as 501c3 charities in the United States. Other entities around the world may have other rules. What is the purpose of a tax exempt organization? The idea is that one, donors to the organization, if it's the right kind of organization, can subtract their donation from their taxable income. But when the entity itself is called tax exempt, what that means is that they don't have to pay corporate taxes on their profits. And as a result, those profits can be retained for use next year. And this is where the disastrous term nonprofit came into being, because a lot of people who like to do good also believe that profits are somehow bad. And so therefore a nonprofit organization would be good. The problem with a nonprofit organization, properly termed a tax-exempt organization, is that if it doesn't make a profit, it will go broke just like any other business. The only difference is that on this particular issue is that it doesn't have to pay taxes on its profits like other corporations. So now the question is, well, so that sounds good, but the challenge is that when you choose a nonprofit or a tax-exempt organization as your business platform for doing good, you're actually limiting the growth. And if you want to do a lot of good in the world, you'll find that tax-exempt organizations tend to kind of have a self-limiting size to them. And it also creates other complexities because there's things called unrelated income or income from unrelated business activities. And so every little thing that you do in a tax-exempt organization is monitored and scored by the taxing organization of your country. And of course, you can see why, because the taxing organizations want to get their taxes. So if you're doing some kind of revenue generating activity that is not directly tied to your charitable purpose, well, they want some of the revenue. That's how they make their money in the governments, by collecting taxes from businesses. So it's helpful to look at, I'm an expert in the history of U.S. tax-exempt organizations. And people have been charitable throughout history. But in the early days of the United States, there were some wealthy people in New England, and they said, well, if we're going to donate money for building a school or some other noble purpose, well, that's work that the government doesn't have to do. And as a result, we would feel that we should be able to not have to pay taxes on our gifts. And of course, since they were wealthy and powerful, they were able to get the laws changed, because the original laws of the United States did not allow for wealthy donors to organizations to deduct those donations from their taxable income and thereby avoiding paying taxes on that. So let's say a wealthy person donates $200,000 to a charity. Depending on their taxable bracket, which is somebody that wealthy is probably going to be paying at least 50% of their income. So what happens is they divert $50,000 from the tax going to the various governments, and instead all that money goes to the charity. And that sounds really nice. That's very tempting and a motivating reason to start a tax-exempt entity instead of a regular business when you want to do good. So what is really doing good? This is, again, where the problem starts to come up. So doing good is basically doing something that is not really commercially viable and providing a benefit to an underserved community. So the charity I founded, our job was to try to save forests. And so forests are underrepresented or underserved communities. They can't fight back when somebody comes at them with a chainsaw. So that was a tax-exempt purpose, to try to save trees. Another good example is easy to visualize. There are organizations in the United States that try to help poor people save money on their heating bills in the winter. And so they raise money, and then they use that money to purchase weatherization products, and then install them for free or at greatly reduced costs for low-income people who normally couldn't afford that. And then the low-income people, the underserved community, get the benefit of lower energy bills, which hopefully will help them in their lives. I mean, it's pretty straightforward. They want to save money and have better climate control in their homes. So that's also all well and good. That's a really kind of conventional and standard purpose for a tax-exempt organization. I'm not going to get into all the different variations of tax-exempt organizations. It's that in the United States, one or maybe two qualify for providing tax benefits to the donors, and the others don't. So, and the more tax benefits that they give, the more compliant they have to be with government rules. So, for example, when you look out at the big environmental groups and they say, oh, your donation is tax-exempt, well, they're also making kind of a deal with the devil, because in those organizations, the percentage of the donations that they can spend on lobbying activities to create meaningful legislation that would change the rules affecting their goals is quite limited. And to an overall, like, you might find a charity that's got a $200 million revenue stream, but they can only spend $1 million of that on lobbying. It's capped. And under a certain level, they're able to spend, I think, 1% or 2% of their gross income on lobbying until they reach a $1 million threshold, and then it just stops. And so what does that mean? Well, if we look at the industries that they're typically trying to fight through the government, they spend hundreds of millions, sometimes, and just hundreds and hundreds of millions of dollars on government relations. So you can see that actually designing your platform as a tax-exempt as well as a tax-deductible entity really is like putting handcuffs if your goal is to change government policy. And what I reasoned, and I was right, when we started the nonprofit in 1990, I said, if we're successful, that's going to open up a whole new economy. And it did, but I didn't make any money from that. I was broke. At the end of 10 years, I was broke from running a nonprofit. And let's look at why that happens. Why do most people who run nonprofits, if they're not wealthy already, why they end up poor? Even though they're creating tons of value in the economy, tons of value, opening up whole new markets. And this is the problem. The original design of charities, and in terms of their legal design, in terms of government compliance in the United States, was that no person affiliated with the administration of the charity could collect a salary. Now, why was that important? It meant that they were all volunteer organizations, and any money raised only went to the underserved community and not into the pockets of the staff. And then, around the beginning of the 1900s, charities, well, first of all, there was wealth in the Gilded Age and the Rockefellers. And of course, the powerful people tend to be good at getting laws passed in the government. They said, well, our charity is so big, we need professional help. And so we can't really run this charity as an all-volunteer organization. We want to take some of the donations and allocate them toward professional staff. And this is where things really got messed up, because instead of charities being a vehicle for wealth purely in one direction, what happened is now in every charity, every professionalized charity, you've got a conflict of interest. How much money goes to the staff and how much goes to the underserved community? Now, there's an organization, I forgot the name of it. It was a pretty cool organization. They solved the problem. They were in New York City, so that's convenient for a lot of wealthy people. And what they would do is they would have one gala a year, and 100% of the revenue for that went to staff. And then all of their online fundraising and all the other grants and everything else, 100% of that went to the underserved community. So they kind of were able to finesse that. But the thing is, when we're looking at the needs of the world, they're very large scale, and charities just don't scale very well. There are also governance issues and ownership issues. So when you really understand what goes on in charities, you can discover pretty easily that there's, let's just say, an opportunity for, I'm going to use a big word, malfeasance. Because now, let's say you've got a charity board, they're volunteers, and they don't have a financial stake in it because that's not permitted. They may or may not get board salaries, and yet these people are responsible for an enterprise that, in the case of a larger one, could be $500 million a year of donations, like the Red Cross or something like that. And I'm not trying to say there's anything going on with the Red Cross. I'm saying that's just one of the bigger charities in the world. And yet, because of all the different financial constraints and the challenge between paying staff and allocating money to the actual purpose of the enterprise, the tax-exempt entity, you just run into conflicts of interest. So I prefer charities that don't pay any staff and don't pay anybody, because then only wealthy people can really actually afford to do it, and they're doing it as an act of pure generosity as opposed to a career. And the thing is, from the work I've done my whole life, you can make a great career out of doing things that the charities say they're aiming to do. And not a slight on charities, but what I'm really saying is that when you look at the mission of a charity, inevitably the goal is some kind of social change which would actually result in economic change. And what I tell people is, why not just start a taxable business who's committed to creating that future world and being a player in that economy. So if we again look back, I co-founded a nonprofit environmental group in the 90s with the intention of changing, and helping build the ecological economy. To a pretty nice degree, that worked, and other people made money from the shift in government policies that began to start focusing more on ecological restoration and less on clear cutting. But I didn't profit from that because we hadn't started with the business that would thrive in the environment we were creating with our lobbying. But if we look at other industries, the logging industry, the meat industry, pharmaceutical industry, they're constantly using their money to create change. They're the biggest social change activists in the world. And that social change results in their business entities getting more profit. So why don't we do-gooders just do the same? Start our entities as for-profit. Now we take the handcuffs off. Also, nonprofit, tax-exempt organizations can't raise capital. Raising capital is what allows enterprises to scale. So if you're working on a global problem, it's very difficult to scale globally on pure volunteer effort and donations, because donations are always going to be the small end of the wealth spectrum. Like if I'm a 100-millionaire, maybe I'll donate $1 million or $2 million a year that I'll replenish from the interest on the rest. And that's what foundations do. They get a big endowment, they invest it, and then out of the profits, they donate. They have to donate by law at least 5%, but if they made 10%, then they're growing and growing. But they're not spending the whole wad on charity. So charity's always, almost by definition, going to be the small part of the economy. And so there's a thwarted growth thing. Now, one of the challenges to, again, the do-gooders, we're often in this kind of scarcity mode. We don't understand business structures. And we have donors, maybe a big donor shows up and wants a tax. They want to be able to write off their donation as a deductible expense on their income tax. And you want the money, and pretty soon now you're in a nonprofit tax-exempt platform as the operating platform for your enterprise. And unwittingly, and then now you have all these various compliance rules you have to file with the government. So it's a lot of paperwork with not a whole lot of upside. So I'm not saying that they're all bad, but then a lot of people try to work around these things by creating one entity that's for-profit, one entity that is tax-exempt, and taxable enterprise versus a tax exempt, or they try to create both. And because they have a big vision, they can see that somewhere in the future they're going to need both these entities to really thrive at scale. But having had experience in building both, and a lot of people come into this have no experience in building either, and as a result, sometimes their missions just get thwarted by odd things. Like, for example, with a tax-exempt organization, typically you need a board of directors. Well, how do you really make sure that these board of directors have the right kind of interests? And also often with leadership, the CEO, the leader of an enterprise, for-profit, taxable enterprise versus a tax-exempt enterprise, either time, a leader might see that they need to pivot. They need to make a change. And often the kind of people that sit on boards are very security-minded, very averse to kind of radical changes and evolving to new times and new opportunities. And they don't have a whole lot at stake, like they're not shareholders. So they're there kind of almost like in a status mode, and suddenly they're asked to weigh in on a decision that they may not even be following that well, because maybe you founded the board of directors just to check off the box for the Internal Revenue Service that you did it. And these people have no qualifications or experience relative to building a successful enterprise of any kind. Now, that's not always the case, but to recruit a board of really highly effective people who are committed to the leadership and the brilliance of the founder, takes time. That, maybe if you happen to be in the right group of people, already successful people, then sure, it comes together. But if you're a pioneer from an underserved community, you may not know anybody who really would be qualified to step in and govern and hire your replacement in the event that you died or got some illness and were unable to serve. And so during the 90s, some of the other tax-exempt organizations, the board stepped in and basically ruined the entity just as it was about to really make its big splash and have their big success, because people freak out. If you look at real leadership, what it takes a lot of courage. It doesn't take as much courage to be on a board of directors. And sometimes people in those positions don't have any real experience with kind of the chaos of real radical change of an enterprise. And what do? They squash down and they reject or fire the founder. And that's happened a lot. In fact, it happened to me. The board meeting was illegal, but I just thought, you know what? It's time for me to move on to do my own thing. So in the end, I allowed that to happen. But look, it's not anybody else's fault. In the early days, myself and my business partners, we wanted a weak board because we saw how boards were messing up other tax-exempt organizations. So we wanted a weak board that would be more or less a rubber stamp for what we wanted to do as executives. Because, just checking the box. We had one meeting once a year in December, and for the rest of the year, pretty much nobody even knew what we were doing. I mean, it was idiotic in hindsight, but we didn't know any better. And we did have a lot of latitude that way. But in the end, we built a very weak board. And when there was a stress, or I had a disagreement with the other founder about how to proceed, and we had never had a disagreement like that in 10 years. And what happened was the board just made a kind of a slapdash decision without understanding me at all. Nobody called me in. That's why it was illegal, because I was actually chairman of the board. So the board met in my absence illegally and fired me. And again, I had a choice because my goal was to pass legislation. So I said, you know what? I'm just going to keep working on my goal of passing the legislation and not worry about having the organizational structure behind me. It was very freeing. I made, amazing discoveries that way. In the end, the legislation failed and it was never passed. Why though? Because in the moment that I saw that there was a time to pivot. Again, my co-director didn't agree with me. The board was totally unqualified to handle a disagreement amongst the leaders and just basically flaked and went to their biggest fear. And so we really couldn't even try what I had in mind. And again, I take responsibility for that. There was a learning experience. I'm not really trying to, diss the other people, because I was on board the whole time with having a weak board. It just seemed like a hassle to keep them in the loop. These are the kind of things that happen with these, tax-exempt organizations, is that if you're going to have a board, you need to cultivate it. And as the leader of the organization, you need really strong communications with your board so that they're not surprised when it's time to do something really major. And you don't want people who are there just pro forma, just their kind of placeholder, low engagement, rubber stampish kind of thing. You don't want that. So how do you find those people? It takes work. Actually, so a normal business is much simpler. The ownership, the governance, the labor is much more straightforward. But again, there are pros and cons to each. I'm not trying to say one is good and one is bad, but I'm saying that the decisions that often people make are done without really tuning the platform to the vision. And since I'm personally an expert in raising capital for both tax-exempt organizations, in other words, charities, I've raised millions in that area. I'm also an expert in raising capital for startups. I've raised a lot of money in that, not as much, about, close to $1 million for really difficult startups. I didn't raise enough. That's partly why I teach, because I know how to do it. I'm doing it again in a certain way. I'm not formally raising capital, but I'm building my own donor community, investor community, people to support my leadership. And when the time is right, if we want to raise capital, I'll have been doing that. And you can see from my other videos, that's exactly what I'm teaching my students to do, is to build a community of financial supporters who are kept in the loop. And then when the time comes, they'll be ready to help fund your enterprise. So where does that leave us? Well, all I'm saying is that when you want to do good in the world, don't discount the lowly, LLC for your startup platform. They're cheap to run. The governance is very simple and straightforward. You don't need a board of directors to start. And that gives you the time to operate. And as you grow and as you're building your revenue stream, then you can, from a position of strength, start recruiting other strong people around to provide the kind of continuity, helping raise more capital. There's so many things that can be done when you start that way. Whereas again, with the tax-exempt organization, there's pretty much, I can't say exactly how big it is, but you'd be hard-pressed to find a tax-exempt organization who has more than $1 billion in revenue. And when you look at the Fortune 500 companies, the smallest Fortune 500 company has an annual revenue of $5 billion. And then there's 499 companies even bigger. So if you're trying to change the world and you're self-limiting yourself in terms of the potential revenue, I just think you're just not really looking at your dreams in the right way and getting yourself lined up for success. And in fact, look at, one of the funniest, I don't know if it's funny or sad. It's not just you or even me, but Elon Musk, he thought that he got convinced to start, to put, I think it was 100 million or 50 million, a lot, as a donation to Chat GPT. It was going to be a charity, all for good. And now the whole thing's a for-profit. I don't even know if he got anything out of it. And because the governance and the shenanigans that were going on in a tax-exempt organization of that size, and they weren't able to grow, and they weren't able to adhere to, they were neither able to grow nor adhere to their virtuous idea of making AI sort of open source and ethical. And that all went out of the drain. And Elon Musk, you could say he did it to himself because he didn't understand what I'm teaching you on this video. If you know Elon Musk, just share it with him. I mean, I'm just saying hi now. He recovered. He started his own for-profit taxable entity called XAI. So he's getting back and doing it the way he wanted to originally. But what if they had just started OpenAI as a normal business, but just there's no law that says a normal business can't adhere to ethical ideas. And there's no law that says that charities are more ethical than businesses. Some human beings are, ethical. And what's ethical? Ethical is what you agree with. The other people who you disagree with, they're unethical. That's humanity. So to say that other people don't have ethics, I disagree. Everyone has ethics. They have their own ethics. You may disagree with their ethics. So if you want to adhere to your version of ethics and build a community, an enterprise based on your ethics, really question. Are you just trying to do a tax-exempt organization so you can get a quick donation from somebody who's got a lot of money and they want to give? Why not have them invest that as an equity position in a for-profit company and let them make money from you succeeding and changing the world? When they donate to a charity, they're guaranteed to lose money. That's not so sustainable, really. Like to me, the model of like I like capitalism. A lot of people are against it. Capitalism has been corrupted with laws and things that part of the reason I do this is to allow average people to participate in capitalism. That right was more or less stripped in the 30s. I've talked about this. Now there's a little more freedom, but to be honest, if you know what you're doing, you didn't even need more freedom. But even that's expanding. Like there are people, I think in the next couple of years, the US laws will be reformed again to really bring back the true idea of capitalism, which is just like people can, in the United States, are free to organize politically. Well, why are we not free to organize financially, for better or worse, right? We organize politically for better or worse. But why can't we organize financially for better or worse? And it's because the free speech laws in the United States were curtailed when it came to talking about money. So this is why there's so little understanding of capital, because capital became kind of a secret craft practiced in the Ivy League business schools and Stanford Business School, and very few other places that people even understand half of what I'm talking about. So I've been trying to make it simple and guide people so that people can succeed wherever you are in the culture, whether you're working at Starbucks or whether you're already a billionaire but you want to do some good in the world. That's why I learned all this stuff, so I could, because before this people would say like, okay, we're either going to do a charity or maybe the government will help solve the problem. And we for the last 100 years, we've believed as a culture that corporations, for-profit corporations, are evil. They're not. People are evil. You can say, I don't actually believe that. I'm saying that. If you believe in the idea of evil, then you've got evil people. Evil people will figure out a way to do evil in your version of what's good and bad. I just look out there. There's people doing stuff. I don't like some of it. Do I want to spend my life trying to get them to stop doing that, or do I just want to go out and win doing my thing? Like, I'd rather focus on what I'm creating rather than spending a bunch of time telling the world that these other people are corrupt, blaming. That's victim mentality. As soon as you say they're bad people, you're a victim. So I don't, if you're following what I'm saying, I'm using the language that's so common, but really what I'm doing is I'm telling you, you're the boss. You can take responsibility for the future condition you want to create. And along the way, if you choose tax-exempt platform versus a normal business platform, those choices can really impact your ability to succeed in your vision. So we want to tune the platform for your vision, not tune the vision to your platform. So I think that's a pretty good message. That covers a lot of what I wanted to say. I'm not making your decision for you. If you're thinking you want to change the world and you want to do some good and you want to compare those two things, book a meeting with me. Just go into the show notes and get on a call with me, and let's see if it would be appropriate to work together to help you really succeed in fulfilling your dream. That's what I care about. Everything else is just tactics. So thanks for watching, and I'll see you in another video.